Welcome to the Rotary Club of Milwaukee. I am Club President Darren Miller. And as we gather virtually today, we will start with the Pledge of Allegiance. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. As prior to our invocation today, I'd like to acknowledge the passing of longtime Rotarian Warren Croonan, who passed away last week at the age of 86. Warren was mild-mannered, brilliant, and enjoyed a wry sense of humor. He was fond of remarking that he was a small-town boy who came to the big city. He received his undergrad and law degrees from UW-Madison and went on to serve as the managing partner of Von Briesen and Roper, a position he held for over 25 years. After his retirement from law practice in 2001, Warren held a variety of roles with North Shore Bank, including vice president, a senior loan officer, and serving on their board of directors. A memorial is planned for later this summer. We extend our deepest sympathy to his family, and we are grateful that the family has directed contributions in his memory to the RCM's scholarship program. Please join me in a moment of silence for Warren. Thank you. And now, Jim Barry, president of the Barry Company, will give our invocation today. Jim.
Thank you, President Darren. I've chosen for today's invocation a student's prayer by St. Thomas Aquinas. Students have been affected terribly by this pandemic, and this is a prayer that St. Thomas Aquinas drafted that a student would make, and we hope that they will all make, but it also is, I think, something that we should think about as we approach problems in life and our work in life. Lord, creator of all things, origin of all being, graciously permit a ray of your light to illuminate our understanding. Take from us the darkness which besets our minds, born of sin and ignorance. Grant us a keen understanding, a retentive memory, and the skill to grasp ideas correctly and fundamentally. Bestow upon us the talents of being exact in our explanations and the ability to express ourselves with thoroughness, sincerity, and charm. Guide us at the beginning of our studies, direct us as we labor, and lead us to a successful completion of our work. We ask all these things through your divine grace. Amen.
Thank you, Jim. Mayor Tom Barrett has declared today, March 2nd, Dr. Joan Prince Day. Congratulations to Joan on the well-deserved honor. Joan was also recognized for her contributions to our community by the Milwaukee Common Council at their meeting this morning. We'd also like to say thank you to our rotating sponsors who help support the work of our club. Their logos run prior to some of our programs and on our website. Today, we'd like to highlight the Milwaukee School of Engineering, a private nonprofit university offering a bachelor's and master's degrees in engineering, business, and nursing. MSOE is committed to fostering a higher standard of academic programming and research and personalized service, instruction, and guidance. President Dr. John Waltz and Vice President of Marketing, Saj Thachankari, joined Rotary in 2018 and 2019, respectively. Eckert Groman, founder of the MSOE Groman Museum, which boasts an art collection dedicated to the evolution of human work, has been a member of our club since 1968, more than 50 years. Thank you to MSOE for your continued support of our club. I'd like to also remind everyone that our virtual programs are available to the public right now, at least for the next few weeks. And we've got some great speakers lined up for March and April. Next week, March 9th, we will be joined by John Burke, president of Trek Bicycles. On March 16th, we will welcome Jason Stein from the Wisconsin Policy Forum to talk about the UW system budget. We are excited also to welcome Mark Murphy from the Green Bay Packers on April 6th. Please tell your friends about these great program offerings. This Thursday, we will be foregoing a noon snack program for a virtual happy hour beginning at 5 p.m. Bring your beverage of choice and connect with fellow Rotarians in an informal setting. These monthly happy hours will be the first Thursday of the month going forward. Join us for that. The March Coffee Connector is scheduled for next Thursday morning, March 11th at 7:30 a.m. Contact Teresa Regan or the Rotary office for the Zoom information for the Coffee Connector group. The Done in a Day Committee has arranged for a socially distanced volunteer session at Feeding America on Friday, March 12th from 1 to 3:30 p.m. We're looking for up to 6 volunteers to help sort food. Contact the Rotary office for more information to sign up. While we cannot wait to get back in person, in the interim, we have Rotary Pairing Connections. Sign up each month to be randomly paired with another Rotary member. It will then be up to the individuals to schedule a virtual or socially distanced meetup or meetups throughout the month. Contact Michelle in the Rotary office if you would like to be paired up for March. And now, Jody Ristow, Financial Advisor and Managing Director with Baird, will introduce our speaker today. Jody?
Great, thank you, Darren. I have the pleasure of introducing Michael Antonelli to discuss the hot topic of, or a topic du jour, Bitcoin. Michael has an incredible talent of making challenging topics accessible and understandable for both market experts and market novices. So it's an incredible talent. I think you'll really enjoy his talk today. Just to give you a little bit of his background, Michael is a market strategist for Baird's Private Wealth Management Group. In his role, he creates market-related content for clients focusing on the behavioral side of investing. He also appears in print, TV, and online to talk about what global markets are doing and why. Michael began writing a daily email in 2010 as a way to let overseas institutional clients know what was happening while they slept. The list grew slowly, but as of last week, it's at just shy of 4,000 individuals, including corporate executives, traders, portfolio managers, private clients, wealth advisors, and journalists from all over the world. He started posting it online in 2013 and is now the Bull and Baird blog. In terms of his experience, Michael was derivative sales, and then he was an institutional equity sales trader. And in 2009, took over the market strategist for our private wealth management business at Baird. Michael received a BA in history from Purdue University and an MBA in analytic finance from the University of Chicago Booth School of Business. On the personal side, Mike was born in San Diego, California in 1973. He has a wife, Kimberly, son, William, and a daughter, Catherine, and they reside in Whitefish Bay, Wisconsin. And his passions are travel, wine, and being a semi-professional bartender. So without further ado, I'm going to turn it over to Michael. Thank you for being here.
I really do appreciate the opportunity to speak to you guys. I've been super excited to talk about this topic. It's becoming, kind of a hot button issue, not only amongst investors, Baird's clients, but also amongst the average individual. Institutional. This topic alone has seen kind of the most surge in interest. So thank you so much for that. Michelle, you can move on to the next one. We'll kind of go straight to our Bitcoin introduction slide. This is the start of our deck here today. So we're gonna do a high level talk. Okay, we're gonna do a high level talk because when you think about Bitcoin, you might think about what is it, how does it exist, what are people doing with it, what's the purpose of it. But there's layers and layers and layers and layers of this stuff, so much so that we'd have to bring a cryptography expert on here to talk about cryptography. And I know that in a 30-minute talk to the Bitcoin Rotary Club, we're not going to want to dive into cryptography, but we do need to kind of talk about where it is, where it comes from, kind of how it's made, how people are using it nowadays. I got lots of takes on this stuff. So come along with me. Michelle, we can advance one more slide. If you want to follow more of my work, and I believe me, I would love you to. I do write a blog called Bull and Baird. My lovely wife came up with that term. Kind of a play on Bull and Bear plus my firm's name. You can follow me on that blog, Bull and Baird. You can also follow me on Twitter. That's where I spend, a lot of my time talking about the topics of the day, whether it's economic data, whether it's market data, whether it's takes about the best food in Milwaukee. I'm a huge proponent of Wisconsin on Twitter. I occupy a huge space of pushing Wisconsin and Milwaukee on Twitter. 16,000 followers. Look, it's not a lot. It's not a ton, but it's tough to be a finance guy and get 16,000 followers on Twitter. Believe me, it's not easy. So I'm kind of proud of that as I kind of expand not only my brand, but Baird's brand. One of my goals is to always be able to explain things in kind of an easy to understand way. And I spent all of last year talking to our clients about why the stock market was doing so well while COVID was raging. And then in October, I switched to, please don't make a change to your portfolio based on your views of an upcoming election. So my kind of brand inside of Baird is to bring real easily understandable presentations and blogs and podcasts to our clients and the world. That's kind of what I intend to do. And that's why I'm going to try to make this talk with us, with you guys today, kind of fun and interesting. So, all right, Michelle, let's move on to the next slide. We're going to start with the real meta talk. All right. We're going to start on a high level meta talk. Who determines what these things are worth that you see on the screen? Who determines? Who determines? Let's go one by one. The first one is a house. This house is actually in Whitefish Bay. I drive by it every day. It's spectacular. I don't know who lives there, but it looks spectacular. Who determines what a house is worth? You think it's worth something, so you have some idea what it might be worth. But who determines the price? Well, the price is only determined when a buyer and a seller come together and they agree on the price. Say you think your home's worth $1 million, but a buyer thinks it's worth $500,000. What's the value of your home? What's the price of it? It's literally nothing. Nobody can agree at that point. When you finally agree with a buyer and a seller, that price represents the price of your home. It was discovered by a buyer and a seller. What about a share of stock? Who determines what a share of stock is worth? What is a share of stock? A share of stock is just kind of a claim on a company's future cash flows times some amount that an investor is willing to pay for it. We try to model that cash flow, and we have, professionals who try to do that. But what something's willing to pay for those cash flows is really esoteric. Sometimes you might be willing to pay a lot for a cash flow. Sometimes you might be willing to pay a little. Depends on the economic situation. But a share of stock is traded on an exchange. A buyer and a seller agree on that price. That's how the price is determined of a share of stock. A buyer and a seller meet a lot like a house, but this time they meet on an exchange. What is a dollar? Who determines what a US dollar is worth? Why is it worth anything? Why is the US dollar worth anything? Well, the United States economy does produce 26 trillion in goods every year. That's a pretty good backing. We also have a military, the most powerful military in the world. Our government also has the ability to tax the world's most productive sector in history, mind you. That gives the dollar its value. That's what determines what the dollar is worth. Who determines what gold is worth? And here's where I'm going to move on to Bitcoin. Now, stick with me here, people. You might own gold. You might own gold in your portfolio. You might be interested in gold. It's a fairly popular kind of asset class amongst our clients. I'd say that there's a fair amount of clients that own gold. What is gold? And listen, you got to stay with me. This is a thought exercise. Gold is a rock. We dug it out of the ground one day in the past. Okay, we dug it out of the ground one day. You can read through the books of antiquity and you'll read about gold. But there was a day where somebody dug it out of the ground and said, this is worth something. This. And the other person said, it's a rock. What do you mean it's worth? You literally just dug it out of the ground. Why is it worth something? Well, look, it's shiny. Okay, but you just dug it out of the ground. But look, it's portable. Look, I can bring it along. It's durable. Why don't we trade this for things? Oh yeah, maybe that is worth something. So at day zero, gold was just made up. The price of gold was just made up. Today, the price of gold is set on an exchange. A buyer and a seller meet to agree on that. But make no mistake. If tomorrow we decided that the price of gold was zero, it would be zero. If humanity all of a sudden decided that gold had no value whatsoever anymore, it would be worth zero. So things can appear out of nowhere and be worth something, right? They can. It has happened. You're looking at an example of it. Over time, humanity accepted that that was worth something. All right, Michelle, let's move on. Let's move on to talking about Bitcoin. What is it? Where does it come from? Is there an actual coin? The answer to that is no. There's no actual coin. I'm going to be using a couple words here over the next few slides that I'm going to lean on. I'm going to kind of let you know that they're important. Decentralized is a term that I'm going to lean on a lot. Decentralized. I'm going to lean on the term ledger, and I'm going to lean on the word blockchain. So you'll hear those, and I'll talk about them. But Bitcoin was created in 2008 by Satoshi Nakamoto. Now, Satoshi Nakamoto is a pseudonym. Nobody knows who this actual person is. It might be a group of people. It might be. This person or persons wrote a white paper called Bitcoin, a peer-to-peer payment system. It happened in 2008. And that's what Bitcoin is, in essence. It is an app that runs on a decentralized network as a payment platform. That's it in its simplest form. What else is an app on a decentralized network? You know what it is? Email. Email is an app that sits on a decentralized network, the internet. You use it. Email is an app. Bitcoin is an app that sits on a decentralized network to send money back and forth, to send funds back and forth. When you own a Bitcoin, and you don't have to own one, you can own fractions of it, you own the rights to access a specific address on the ledger. The ledger, think of the ledger as a big book. The ledger is a book. When you own a Bitcoin or a fraction of it, you own an address in the book that lets you send funds back and forth from it to participate in the app. Now, this kind of stuff is really hard to grasp, and I'm trying to make it kind of simple as I can. There's a guy named Dan Loeb, who's a hedge fund manager in New York. I respect him. He's a pretty smart guy. He says this about Bitcoin. It says it's a real test of being intellectually open to new and controversial ideas. I'm asking you guys, and you guys are some of the smartest people in Milwaukee. I know that for a fact. I'm asking you to be open to thinking about things in a unique way. Just like on day zero, somebody was open to the fact that a rock dug out of the ground had value to it. Remember, things have value because other people say they do. The price of something's determined when a buyer and a seller get together and agree. If a bunch of people agree on something, that's a very powerful force in the world, a very powerful force. So Bitcoin is an app that sits on a decentralized network to send money back and forth. You hold these Bitcoins in what's called a digital wallet. A digital wallet. You hold it essentially in an account, much like you would hold a stocks in a digital account somewhere. There are places that these digital wallets are held. There are exchanges that Bitcoin is traded on. Places like Coinbase and Binance are two of the bigger exchanges. You can hold your Bitcoin in a wallet at those exchanges. You can also, and this is a much, much harder thing, pull that address off the internet and safely store it in a little key, in like a little USB drive. You can say, this address exists. I'm pulling it off the internet and just putting it on a jump drive. You know those little jump drives you put pictures and stuff on? You can put that address on a jump drive. The problem is if you lose your password to that, you've lost the money. And there's a guy recently who only had so many guesses left at millions of dollars on his little jump drive, and he forgot the password. That was me. I'd have that password pasted all over this basement right now. Okay, so you hold it in a digital wallet. There's no physical form of this. All right, let's kind of move on, Michelle, to the next slide. Okay, now we're going to talk about blockchain. Blockchain is a term that you will hear a lot, okay? Let's think of the blockchain. Let's think of this network as a book, okay? It's a book. It's the ledger of transactions, okay? It's a book with all transactions in it. Each page is a ledger of transactions, okay? Each block on that chain is another page, okay, of just transactions. People sending money back and forth. Think of it as the history book of all transactions in Bitcoin, all the way back to the guy that spent $10,000 Bitcoins on 2 pizzas. By the way, that 10,000 Bitcoins is worth $500 million today. Anyway, just think of it as a book. Each block is a new page. There's this thing called Bitcoin mining. People build big computers with lots of graphics cards and power, and they try to compete with other miners to solve an algorithmic formula to add a new page to the ledger. Okay, that's the kind of the easiest way I can display it. It's a book with all the transactions. The miners are trying to add another page to the book constantly by mining a formula. Okay, this is a formula that's essentially, and here's the term for it. You ready for this? It's an elliptic curve digital signal algorithm. Good luck. I mean, good luck. All right, I'm not a cryptography expert. I'm not a mathematics expert. That's the formula that they're working on. Every time somebody beats their peers to solve the formula, they get the ability to add a new block into the book, to add a new block to the blockchain. They're adding a page to the ledger, and they get rewarded for that. Okay, they get rewarded with a Bitcoin. So people are competing with each other to solve a formula that lets them add a page to the book, and for that use of computer power and electricity, they get rewarded with a Bitcoin. That's called mining a Bitcoin, okay? The rewards decrease over time to a cap of 21 million. Each miner is competing for a smaller and smaller amount to a cap of 21 million. About 18 million Bitcoins have been mined. 21 million is the total. They said it could take hundreds of more years to get to 21 million. Here's the thing, okay? Remember, Bitcoin is a payment system. It's just an app, a payment app on a decentralized network. It can only process about 4 transactions a second. 4 to 5 transactions a second. So, if you wanted to pay for coffee, or if you wanted to pay for your lunch, multiply that around the world, it can process about 4 to 5 a second. Visa, everybody heard of Visa? They can transact 1,700 a second. 1,700 transactions every second. This is one of the drawbacks to Bitcoin as a currency. We're going to talk about why I think it's not a currency in a second, okay? So just remember, it's just a payment app. That's it. The blockchain is the decentralized network of a bunch of computers around the world. It's a book. It's a book with all the transactions. The ledger is just all the transactions, but it's decentralized. Each node in the chain keeps a record of the transactions. There isn't one authority that keeps all the transactions. It's decentralized. That's one of its strengths. If a bank loses its ledger, it has no idea who has what money. That's a centralized source. Since Bitcoin's decentralized, everybody has the ledger and they're all agreeing with each other. When somebody tries to add a block to that chain, a page to that book, all the other ledgers say, I agree. I agree. You've solved the formula. I agree that we are adding a page to the book of transactions. All right, let's move on to the next slide, Michelle. Centralized versus decentralized is the key to all of this. This is its strength. This is the reason why people love it so much. Fiat money. What is fiat money? It's a term you'll hear about amongst Bitcoin people. Fiat money is the US dollar, is the Japanese yen, is the euro, is whatever currency you want to make it. Fiat money is the dollars that we use, the paper money that we use to transact in. That is centralized, right? The Federal Reserve and the Treasury print US dollars. It is unlimited. They can print as many dollars as they want. They are the central authority. If you want to do a great event, I have a great take on the national debt and inflation that I do for Baird's clients. Reach out to your Baird advisor, or if you don't have one, there's one on here you can reach out to, but I do a great event about this. Anyway, the US dollar can be printed in an unlimited amount. The ledger is non-transparent, right? You can't look into the ledger and see where the transactions that have taken place. You can't. It's controlled by banks and by the Federal Reserve. Bitcoin is decentralized. It's capped at a certain amount. The ledger, remember that book I said, it's transparent. You can look into the book and see every transaction that's ever happened. That's what all those nodes are keeping track of. And the users are anonymous. The users just own an address on the blockchain. If you own a blockchain, you just own an address on that chain to buy and sell money. You're anonymous on it. That's why people are really, really excited about this. They're really excited that there's no central authority that can print money, that can control the money supply. It's capped, decentralized, the ledger's transparent, and users are anonymous. You might ask yourself, and you guys feel free to ask questions in the chat. Who regulates this? There is no regulator. That's one of the drawbacks from its investing perspective, certainly. But there's no regulator. There's none. There's no central authority on this. But some people view that as a strength. Some people view that as a good thing. Remember, right? Some people view that the fact that there is no regulator, that there is no central authority, is a good thing. The internet has no central authority either. The internet has no person that determines what happens on the internet. There are big entities that kind of control information, like Amazon and Google and Facebook, and there are Apple, and there are entities that kind of dominate it, but there's no central authority that regulates the internet. So, all right, Michelle, let's move on to the next one so I don't get too long-winded here. There's lots of coins. There's Bitcoin, but there's lots of other coins. This is just some of them that I pulled off of an exchange. Ethereum, Cardano, Tether, Polkadot, Litecoin, Chainlink, Stellar Lumens, Uniswap, Dogecoin. There are more coins out there. These are what are called alternative coins or altcoins, and they are the same thing. It's a decentralized network with a reward, i.e. the coin, for helping to make the network work. Ethereum is the second biggest network in terms of size behind Bitcoin. Ethereum is a decentralized network used to make apps, like apps. They use the Ethereum blockchain to make apps. And to participate in the blockchain, you get a coin as a reward. If you participate in making sure that the network is true, you can mine a reward, which in this case is called an ether. So I know this all sounds weird. Believe me, I even think it's weird even talking about it. I'm just trying to explain in the simplest terms what it is. People now trade these coins. These coins that I mentioned, which are rewards for helping to manage the network, are tradable on exchanges. What is something worth? What is something worth, guys? Do you think Bitcoin's worth 0? Fine. I'm not going to talk you out of that. Do you think Bitcoin's worth $1 million? Fine. I'm not going to talk you out of that either. What is something worth? It's worth what a buyer and a seller agree it's worth. You might think it's stupid, okay? You might say, this is stupid. I can't believe what I just sat through. But the price of one Bitcoin is $50,000. Someone thinks it's worth $50,000, so it's worth $50,000. I'm sorry, but the value of your home is what somebody's willing to pay for it. Again, it's really hard, like Dan Loeb said, to think about this stuff. You have to be open intellectually to changes in the way the world works. Just like somebody who brought that gold bar to a bazaar one day and said, I want to trade this for something. At that point, that person selling whatever they were selling had to be open to the fact that this could be worth a medium of exchange. All right, let's move on to the next slide. Problem with all of this is crazy volatile. Crazy volatile. This is what's called a percent off high chart, which means how far has something fallen from its high over time. This is a 5-year version of Bitcoin. My legend's a little small here, but I'll walk you through it really quickly. This is 2016 to 2020, essentially. So at the start of 2016, Bitcoin was trading at its high. It then fell 30%, 30. It then went back to where it's high, then it fell 35%. Then it went back to its high, then it fell 66%. Bounced a little, fell 83%. Went back to its high, and now right now it's in the middle of a 30% decline. If you're the kind of person, okay, that gets nervous when the stock market goes down a few percent, this is the last thing you'd want to be in. This thing crashes all the time. It crashes all the time, okay? Ask yourself, and this is something I ask our clients all the time, what kind of an investor are you? Did you sell in March of 2020? Did the election scare you out of your investments? If you're that kind of person, I would just be like, that was cool. It was great to see Mike. He seems like a smart guy. I should read his work and then tell Mike's bosses that he's amazing. That was a little plug. But this is a really, 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 really volatile instrument. Super, super volatile. It is, you have to be willing to suffer overnight 30% losses in these things. It's super volatile. Super, super volatile. All right, let's move on to the next slide. I think I'm kind of near my last slide where I'll do my final takes. Then there's some questions in here I'll kind of answer. I think I'm 25 minutes into this anyway, so I'll kind of rip through a little bit of Q&A. why does something have value, guys? Why does something have value? You think Bitcoin's a zero. I know there's some of you on there. There's 71 on you, which is awesome. That's bigger than some of my client events. There's 71 people here on you. Some of you are out there like, this is a zero. It's a formula people are solving. They get a reward. You can hold it in a digital wallet. I don't get it. It's a zero. That's fine. I'm not here to talk you out of that view. I'm really not. I'm here to try to talk you into the view that more people think it's not a zero than think it's a zero. Simply by the fact that it's trading at 50,000. More people want to buy it above zero than want to sell it down to zero. Right? Clearly they do. What does something have to be to qualify as money? Okay, what does something have to be to qualify as money? It has to be a medium of exchange. It means it must be widely accepted as a payment for kind of goods and services. It has to be a unit of account. It means it has to be considered money. It must be the unit that prices are made in, right? Bank balances. I can buy a car for it. I can deposit it in a bank. And it has to serve as a store of value. Those three things are what money is. In order to be considered money, it has to hold its kind of purchasing power over time to a reasonable degree, right? Those three things. This is why I think Bitcoin is not money. This is why I think Bitcoin's not a currency. I really don't think it is. And I don't think that will be the eventual end game of it. To hold its purchasing power over time, it's gone from $100 to 50,000, okay? Again, somebody bought 2 pizzas for 10,000 Bitcoins back in the day. That's worth $500 million right now. That's really hard to have as a currency. And nothing is priced in Bitcoin. I can't buy a car for Bitcoin. I can't buy a Starbucks coffee for Bitcoin. So it's not a unit of account. Is it a medium of exchange? Is it widely accepted payment for goods and services? That's not widely yet, but it's kind of on its way a little bit. I mean, you can transact in it in some places, but the advantages of Bitcoin is that there's no centralized hub. There's no middleman. There's no banker. There's nobody that can print the money. It's portable globally. It's portable globally. Think about that. If you are in a country that has capital controls, let's say you have $1 million, you're in a country that has capital controls, you can't get your million out. How are you going to get it out? You can't wire it out. You can't carry it out. There's guards at the border. You can't get your money out of this country. If you could buy Bitcoin in that country, it's now portable globally. You could put it up in Bitcoin and now go to another country and there's your money, right? It's portable globally. That's one advantage of it. A lot of people think that no regulation, the decentralized nature of it, is an advantage. The US dollar is a centralized authority. Centralized authority printed by the US government. So how should we think about Bitcoin? I have 2 takes for you, 2, okay? 2. I don't think it's a currency. I don't think its eventual end game will be a currency that we transact in. There are 2 ways to think about Bitcoin. This is the most important part of the speech, and it's the thing I hope you take away from this. One is to view it as digital gold. View it as digital gold. It's a scarce asset. It's not physical. You can't hold it. It's digital. But people are viewing it as a store of value. Gold traditionally has been a store of value throughout history. People have stored value in gold. Think of it as digital gold. There's a scarce amount of it. It's portable. And other people have viewed it as a store of value. So it can be viewed digital gold. It could also be viewed as digital real estate. And this one's going to require a little bit more nuanced view of it. Say the people that hold Bitcoin in their accounts are essentially the landlords. They need to be rewarded for you using their item, which is the Bitcoin itself. Say you want to transport that money from your country globally. You need to essentially go rent a house to put that money into while you go to another country. Think of the person that holds the Bitcoin as the landlord, and you pay him a rent on it to use it to transact your money. That's another way to kind of think about it. There are digital landlords that hold the Bitcoin, and people that use it are essentially paying a rent to the landlords. Now, these are all kind of theoretical ways to think about it. I don't think it's a currency. I don't think we're going to be buying and selling Bitcoin as a currency because, again, it's limited by its transactions, how many it can process. And that's kind of a problem with its protocol, which are the rules of that blockchain. Here's the thing. Financial services industry is really kind of struggling with this in terms of kind of compliance and demand from clients. There's clients that say, I'm interested, talk to me about it. But compliance, on the other hand, is like, this is not regulated. It's not easily custodied. it's super insecure. So Baird would closely follow the investment case for Bitcoin, and continue to track ways to responsibly gain exposure to Bitcoin. But it's still being debated amongst the regulatory agencies. We want to be thoughtful about it, of course. We want to be thoughtful about it. Our advisors want to be thoughtful about it, but there's just no great ways right now to deal with not only the compliance side of this, but how does it fit into a client's financial plan? Say you want to add Bitcoin to your financial plan. Well, it might be considered, part of the high growth, kind of highly volatile section of your portfolio, but you'd have to rebuild your financial plan from the ground up to include it. You can't just tack it on, like just stick it on to your financial plan. Every situation's unique. While Bitcoin might be kind of gaining acceptance, it's still in its kind of very early stages of adoption, really fairly early stages of adoption. And that's what the financial services industry is struggling, because there's no great way to kind of play the price of Bitcoin. There's really no great security. You really just have to play the Bitcoin itself, and firms are having trouble custodying that Bitcoin, holding on to it. I'll tell you why. The best case scenario is, say you wanted to invest in Bitcoin and you did, and it goes up, and it's part of your financial plan, and great, now it's a new asset class. The worst case scenario is that it gets stolen from you. Okay? Just outright stolen. And let me tell you a quick story before I go to Q&A. I owned Bitcoin back in 2012. Okay? I was like, this thing looks unique. People are talking about it. I got some buddies in business school that were into it. It's like $200 a coin. I'll just buy 2 coins. It's $400. Maybe it's something big. Maybe it's digital Beanie Babies. I had no idea. I really had no idea. I'm like, let me just buy a couple of these and hold on to them. And if I hit a big one day, I hit a big one day. If not, who cares? It's $400. Like a year later, they were stolen from me. Stolen, gone, poof, gone, see ya. I owned them on an exchange called Mt. Gox. Mt. Gox was an exchange in Japan that was kind of an early exchange for crypto. Gone. I had nobody to go to. There's no agency I could go to. I can't call the SEC or the FDIC or somebody and say, hey, I lost my 2 Bitcoin. First of all, they would be like, what? What's a Bitcoin? This is 2012, remember? That kind of problem still faces us today. These things, if somebody hacks the address, they can empty an account and it's gone. There's no regulator. It's gone. It's volatile. It can be stolen. These are things that the industry is kind of struggling with when they engage with their clients about it. But that being said, as I move on to kind of Q&A here, you have to be open to unique takes on the world as it evolves. Okay, why is a piece of art worth anything? It's just a drawing. Why is a piece of art worth anything? Because it's scarce and somebody finds beauty in it or value in it. Again, it's just a drawing. Why is the Mona Lisa, worth more than something that my daughter did in 2nd grade? Well, there's only one of the Mona Lisa, and my daughter's not a famous artist. But again, it's just a drawing. You might think Bitcoin's worth 0. You might think this is all kind of just play money in a bubble and all these things. Bitcoin is part of something called the Big Long. The Big Long. It's a theory of kind of what's going on today. And if you want to hear more about that, again, reach out to your Baird advisor or Jody on here. We'll talk to you about that. That's another great presentation. The Big Long is really important for investors right now to think about in terms of their money. Let's just move on to some Q&A, because there's like 10 good questions in here. I want to kind of go through them really quickly as we before we kind of wrap up here.
Michael, I usually will read them for you if that's okay.
Sure.
I just want to give you a break. Okay.
Go ahead.
Well, thank you. You've certainly given us a lot to think about, and people are very active in the chat. And Bob Poussaint says, isn't there a limited amount of Bitcoin, which I think you said 21 million coins? Right. If so, what happens when the final coin has been created? Then what happens? So
that final coin has been said the formula gets so hard that it's going to take hundreds of years to do that. So it's certainly something that will be beyond all of us in here, unless science really has a huge advancement recently. But that will be the total cap of the money supply. That will be that they will have reached the total cap of the money supply. Remember, it's not an unlimited, it's not like the dollars. There's no unlimited amount of it. It will hit the cap. And then if Bitcoin is still a thing hundreds of years from now, the price will reflect that there's no more mining to be done, right? The miners get rewarded with a Bitcoin when they confirm those pages that go into the blockchain. At that point, once the blockchain is complete, then it's going to be a question of, what is this worth now? What is the transaction worth now? But that's hundreds of years from now, I would guess that Bitcoin's current state in the world 100 years from now will look a lot different than it is today. Yeah.
Paul Westphal asks, anti-money laundering on Bitcoin. Can AML be accomplished with Bitcoin?
Yeah, and Paul is a financial services guy. I think he's along the same lines of me, thinking about this intersection between, hey, I'm interested in this, and what are the regulatory hurdles? AML is definitely a hurdle about it, and I have no doubt. I have no doubt that Bitcoin is probably used in some ways for illicit transactions, whether it's money laundering or drug dealing, or it's an unregulated, decentralized payment system. So to say that that's zero is probably unlikely. So the AML hurdle is definitely going to be an issue. It will be an issue, and I know the SEC is right now put out guidance about digital assets. I know they're trying to be thoughtful about it, but Paul's question, can it be accomplished? It's a great question. It might not ever be able to be accomplished in a truly 100% way.
I think you may have answered this. Pat Cronin says, can blockchain be hacked? Is that what happened with your story of the...
Okay, so can the blockchain be hacked? The answer to that is no, because the blockchain, remember, is a decentralized network. Every computer has to agree to add a new block, okay? They all have the ledger. They all have that book on their computer. When you add a new block, okay, you add a new block, every other block has to agree that that's correct. Can an address be hacked? An address, which is, say I own 1 Bitcoin, I own an address on the blockchain, that can be hacked. Somebody has your password, poof, gone. They have access to your address, they just take it away. There have been what's called forks in Bitcoin. Forks are when somebody wants to change the rules of the platform. They want to change that formula. They want to change the rules of the blockchain. They'll fork it. There's something called Bitcoin Cash, which was a fork from Bitcoin where the rules were slightly altered. Anybody who wanted to stay at the original rules stayed with Bitcoin. Anybody who wanted to go to the new rules went to Bitcoin Cash. Can the blockchain be hacked? We're talking quantum level computing here, like quantum level computing. Addresses can be hacked, yes.
Okay, and Tim Hunter says, Bitcoin requires enormous computation power. It has been said that power requirements for this approach that of the country of Denmark. How can we justify using Bitcoin with the environmental impacts of this energy consumption?
Yeah, so in order to do that mining process, like we mentioned, that mining which is trying to solve the formula to add a block to the blockchain, you have to use computing power and electricity. Those are the two kind of inputs to mining a block, to adding a page to the ledger. It's a great question. The electrical usage globally will rise as more people try to solve this formula. Certainly as the value goes up, it's more, it's more enticing for a miner to want to solve the formula, to have a gigantic, shipping container full of computers that draws electricity. It's a great question. I mean, it's a question about, it's an ESG based question. Should electricity be used to try to make money? Electricity is used in lots of ways. I mean, should we use electricity to make bombs? I mean, there's different ways to think about like the environmental impact of the use of electricity. Probably a topic better suited for somebody who's more of an ESG guy than me, but I do see that the electricity usage will probably rise over time.
Does it make sense that the volatility will decrease as the markets and technology mature and it becomes more secure?
That's possible. It's possible. It hasn't decreased over. So Bitcoin's probably been in adoption for at least, 8 or 9 years. It's still been highly, highly volatile the whole time. It's still just as volatile today as it's been in the past. Will it become less volatile? I don't think so. Given the kind of decentralized and digital nature of it, the only way the volatility would decrease is if it got widespread adoption and more people started holding it, less likely to trade it. But what's volatile? Amazon.com's volatile. So is Tesla. There's lots of stocks that are super volatile. Just because more people hold Tesla doesn't make it less volatile. I think it'll always be a volatile asset class by its very nature.
Tony Fernandez says, this seems to me like an old-fashioned pyramid scheme. It has value as long as people believe it has value. There are no assets that back it up. Am I off base? If suddenly everyone wanted to sell with no buyers, the value would be zero.
So it again goes back to a little bit of the question of why does something have a price? Why does something have value? Remember, Bitcoin is an app that lays on a decentralized system. The app is a payment app. Okay, it's a payment app. It's a way to pay people. It's a way to pay people money. The Bitcoin itself is a reward for mining the blockchain, and those are tradable on an exchange. That doesn't strike me as a pyramid scheme in the traditional sense of the word, which is you take money from somebody and you pay somebody else out. And, I don't think that's the best description of it. When you're saying if suddenly everybody wanted to sell no buyers, the value would be zero, that's true of anything. That's also true of gold. Okay. If all of a sudden humanity decided gold was zero, it's zero. If the world decides your home is worth zero, it's worth zero. That's the case with almost anything. If suddenly everybody wants to sell and there are no buyers, that's why I get a little bit meta on this stuff. And I'm not trying to sound really
Right.
I'm not trying to sound real academic here. You know what I mean? I'm just saying like gold has a price because people agree it has a price. And that's the only reason.
If someone wants to buy Bitcoin today, how do they do it? I mean, there's.
Yeah. So, like I said, a financial advisor cannot say to their clients that they should buy Bitcoin. Okay. That's not allowed. It's not legal. And it's not something that Baird does. It's not something that any financial advisor does. You cannot solicit transactions because again, there's no, the regulations around it are pretty strict. People right now buy and sell Bitcoins on exchanges. That's where they're buy and sold. They're bought and sold on various exchanges. There's one exchange coming public called Coinbase. I believe that they are going to have an IPO. So exchanges are where people go to buy and sell Bitcoin.
Then someone must hold cash.
So the exchanges have what are called digital wallets, right? Those digital wallets. So if you went to an exchange and you wanted to buy one Bitcoin, you would deposit $50,000 and you would buy a Bitcoin and they would hold that Bitcoin in a digital wallet. That would be kind of the process that a transaction would be taking place. But yeah, that money is being held by the exchange, if you will.
Okay. Matt Madsen asks, will quantum computing fundamentally change the dynamics of mining?
This is definitely a question that is way out of my realm of expertise.
Okay.
So I've read a little bit about quantum computing. Again, this stuff is, we need some MIT people up in here. I do know that people have said that when computers get super, super sophisticated, they might be able to solve that formula instantly, but I don't know what kind of time frame there is on that. We need a computer science expert.
Yeah, that's right. How does, let's see, how does one literally cash in or translate, for lack of a better word, Bitcoin to currency?
So on the exchange.
On the exchange.
So on the exchange,
that's
if
great.
you bought a Bitcoin for $1 and it went to $2, you could sell it on the exchange. And there's another question here about the IRS. The IRS considers these assets. You would have to report this income to be taxed. That is how the IRS would view this. Just like if you sold a piece of art, you have to report that gain as income. That is a taxable event. So the exchanges are where you would deposit money, where you would get your money out of. That's how people are currently transacting.
Alex Chu asks, does Tesla's purchase of Bitcoin set an industry standard for diversification of treasury investments?
Yeah, this is a great question, Alex. So if you guys don't know, Elon Musk, who is the CEO and founder of Tesla, bought over $1 billion worth of Bitcoin and put it on Tesla's balance sheet. Quite a statement by a guy who is kind of been viewed as a revolutionary maverick, between SpaceX and the car company. Will it change the way the industry views diversification for treasury investments? It might. It's probably early. If you saw something, if you start to see banks and maybe something like some old school companies like AT&T, or if you start to see some old school companies start to poke at this idea, it might gain more acceptance. At this point, Tesla's a pretty maverick. Led by a pretty maverick kind of guy. I don't think it changes it immediately. It's curious to me because that's a heck of a bet on Bitcoin having a future. That's a huge bet. He's essentially, he's got a fiduciary responsibility to that company, and he has spent $1 billion of their money on this asset that you might think's worth zero. Again, you might. He doesn't. So that makes a market.
Yeah. How are the successful miners rewarded?
So that mining is not you have a pickaxe, whatever. Mm-hmm. The computers are trying to solve an equation that allows them to process some transactions and add a block to the chain. They get rewarded based on how many coins have been produced. Remember, the reward goes down over time, which makes it harder and harder to mine a Bitcoin. Their reward is a Bitcoin. Their reward is a certain amount of Bitcoin. I think when this first started, you were getting like 20 Bitcoin to add a block into the chain. You were getting 20 Bitcoin because you solved the formula, you got to process the transactions, you got your reward, you invested electricity and computing power. That reward has been falling over time. So they get a reward the network grants them a Bitcoin on an address. And that is their reward for putting in the computer power and the electricity to solve the formula.
Well, here's a question that'll stretch your thinking a little bit, Michael.
Yeah.
If you replace Bitcoin with a national election, would you trust the results?
Wow, boy. Whoever asked that question, man.
Frank Cumberbatch, okay.
If you replace Bitcoin with a national election, would you trust the results? Here's the thing about Bitcoin, okay? It's a blockchain, a decentralized blockchain, okay? That every block agrees on what the ledger says. Every block agrees on the ledger. That's important. That's powerful. Okay, that's powerful. You know, elections have a central authority. We all vote. It goes to a central authority, right? In our state, the state of Wisconsin, we all vote. It goes to the election commission. They pick the result. Imagine that voting was switched to a decentralized exchange. Imagine voting was switched to a decentralized system. We are all a block in Wisconsin. There's 4 million blocks. We all make a vote on our blockchain and we submit it, and all the other blockchains agree with each other that was the correct, that person made their vote. Is that a more robust system? It might be, right? It might be, because there's no central authority that's counting the votes. There's 4 million blocks on the chain. We all submit our votes, and every other block says Mike Antonelli voted, Jody Ristow voted, Mary McCormick voted. We all agree that that person voted. So it might be.
Might be. Hey, okay, so John Hind asks, how will an auditor value the Bitcoin line on the Tesla's balance sheet?
I think they'd probably value it a lot like any other either physical or digital asset. So say, you know, they hold their cars at a certain value on the, you know, they hold their inventory at a certain value. They hold treasury securities probably on their balance sheet. How would the auditor value the treasuries? They would go out into the open market and they say, Tesla owns all these treasuries. This is the prevailing price of them. Here's the value. They would, when the financial statements are audited, they would say they own 1 billion Bitcoin. It's at this price. We're holding it at this. Maybe a real conservative auditor would give it a 90% discount, an 85% discount just for volatility. Okay. But one of the things I want you to take away from this talk is thinking about it as digital gold. What if they held 1,000 ounces of gold on their balance sheet? How would they value it? They'd go out, they'd say, what's 1,000 ounces of gold worth today? It's kind of the same thing. Think of it as a digital asset. I know that's hard. I know it's hard to say, this exists on the internet. How is it worth anything? I don't get it. Have you ever held a stock certificate? I haven't. My stock exists in an account at Baird. I've never seen it, but it's worth something. I don't hold the certificates in my hand. So it's a digital asset.
Makes a lot of sense. Hey, I think we're running through our questions on the chat here, and we're almost out of time. But one of the things that I learned today was that Bitcoin is only one of many digital options, assets, right? Digital assets, right? Yeah. Classes. So, is there anything we should know about all of the other options out there? I mean, was it Ethernet or something? I mean, there was one that was particularly strong.
They're just different. They're just different decentralized networks that have their own rewards that are named something else, if you will. So some digital networks might exist. So let's think of a digital network that all of us might use. Okay, let's create our own digital network as we end this. You ready? When we buy and sell a home, we have to go to a title company. Okay, we pay the title company. Let's say we pay the title company $1,000. The title company says that person owns the home. I am confirming that the title is transferring to the buyer, okay? That title company exists as a middleman in the transaction to say the buyer and the seller are passing title with each other. Let's say that instead of that, we introduce a Wisconsin-based decentralized network called HomeCoin. Okay, we're calling it HomeCoin. Or let's call it Anton Coin, because I'm the founder of it, Anton Coin. We're going to put everybody's homes on Anton Coin in their own little node. And when I want to transact my home, when I want to sell my home, I want to transfer it to a new buyer, all the network would say, I see this node being transferred to a new owner. Okay, that network now has value. Let's say each node gets a coin, gets an Anton coin out of that, and we can trade the Anton coins somewhere. We've now reduced the middleman out of the equation. There's no more middleman. The title company, sorry if you work for a title company, I put you out of business. The title company is now gone from the process, and the network now decides when home titles are transferred. And that network has a coin for it that represents a reward for participating in the network. That's it. So there's Litecoin, there's Ethereum, there's Stellar Lumens. They're all just rewards for participating in that network, for maintaining that network, and agreeing that what's happening on it is actually what's happening on it. I think the main thing about Bitcoin is it has the most acceptance as a digital asset. It's got the biggest acceptance globally. And once a bunch of people think something is true, it becomes true. But if everybody says tomorrow that Bitcoin's got no value, it can go to zero. I'm not saying just because it's at 50 today, that means it's has unlimited value. Something is only worth what people are willing to pay for it. That's it. That's a lot of things in life.
Okay, one last question from Keith Butler, and then I'll turn this back to Darren. Isn't the assumption that Bitcoin will ultimately be currency the only reason it has value?
So a lot of the Bitcoin proponents, the people who are real Bitcoin diehards, want it to be a currency. They want it to be replace the dollar, replace the yen, replace the euro, replace the pound. Those are the diehards. The diehards want it to be the currency of the future because nobody controls it and it's decentralized and nobody can devalue it by printing more of it. You know, that's a big view of the US dollar. They're printing more of it. They're devaluing my dollar. Some people want it to be the currency of the future. I don't think it will, but that's not the only reason it has value. It's not. It is a payment transaction system. You can transact on it. You can use it as a form of payment. It probably has value because you can take money globally. That probably has value. If you live in Venezuela or China or, you know, and the regime you're under is very strict with capital controls, Bitcoin provides you a value. You can get your money up there and now it's globally portable. That has value, right? It's not just that it's a currency that gives it its value. It's a digital asset. It's a digital asset like digital gold. Is the reason that gold has value because it's shiny? Is the reason gold has value because it's portable? Is the reason gold has value because everybody agrees it has value? The Bitcoin diehards will say it's a currency. My view, my opinion, Mike Antonelli, my view is that it is best thought of as a digital asset, like digital gold, if you will. That's my view.
Got it.
Again, thank you guys. Thank you for having me. I probably took up too much time here. I do.
No, it was perfect. Perfect
wonderful.
time to
Thank you.
close. You've given us some great food for thought and some other potential future programs that we may have to sign up for. We'll talk to Jody. Thank you. No, this was really very wonderful. It was very thoughtful. And Darren, I'm going to turn this back to you so you can close this out.
Thanks, Mary. Thanks, Michael. It was a fantastic presentation on a really interesting topic. I'm pretty sure that we could have you back to explain the physics and science of paint drying, and it would be entertaining. So really appreciate you being here today. And I'd also like to say thank you. And in honor of leaders like yourself, Michael, who speak to our club members, we'll be making a donation to the YWCA of Southeast Wisconsin, whose mission is eliminating racism, empowering women, and promoting peace, justice, and freedom and dignity for all. Thank you again for being here. Next week, I'd like all of you to join us to welcome John Burke, president of Trek Bicycles, his son, Rotarian Richie Burke, founder of the Go Getters podcast, will have a conversation with John about the Trek story and navigating a global company through the pandemic. I hope you'll be able to drop in for a virtual cocktail this Thursday at 5 p.m. We will send a link Thursday morning, so watch for that. Michelle will end our program with our Rotary Now More Than Ever video series featuring Brett Timmerman and Patrick Mustang. Thank you all for being here. Our meeting is adjourned.
Rotary is always trying to diversify its population, and that was kind of a pull, was to be an LGBT voice at Rotary Club, and to kind of show to the LGBT community that this is just another wonderful organization that is welcoming to everybody. And that's been my experience at Rotary, is how open and inclusive it is, and the constant strides that we're taking to be more inclusive and to grow the diversity in our club.
I knew about Rotary from a very early age, growing up in Kenya, and knew of Rotary International in Kenya, and I knew of the good things that are done by the Rotary Club. And so when I moved to the US and came to Milwaukee, and an opportunity came up to join the Rotary Club in Milwaukee, I joined because I wanted to also participate in doing good things in Milwaukee, and just also, in addition, providing a diverse perspective to Rotary, and how we can do more for our minority communities.